Hello, small business owners, and welcome back to another episode of the Small Business Tax Savings Podcast. My name is Mike Jesowshek. I am a CPA and founder over at JETRO, which is a digital accounting firm servicing small business owners exclusively, helping them with accounting, bookkeeping, taxes, and payroll. Now, I also want to mention that if you enjoy our weekly episodes, I just ask that you go and give us a review on whatever site you might listen to us on. That just helps put us higher in the rankings so that we can help out more and more business owners. All right, so 2 weeks ago, we touched on both traditional and Roth IRA options for individuals. And today, I want to go back to the business owner side and discuss some retirement options that are available specifically for business owners. And so, for those of you with no employees, there are two options that you should be looking at, and they are the SEP IRA and the Solo 401k. And now, what I want to do with the rest of this episode is outline those two options, the SEP and the Solo, and give you kind of the similarities, the featuristics or feature and characteristics of each of them to give you a better idea of which one might make sense to you. So I want to start with the SEP IRA. And with the SEP IRA, if you have employees, you can make contributions for them. However, this can become expensive because contributions for employees must match the percentage of the salary that the owner makes for themselves. So if the owner is making contributions of 10% of your salary to the owner, they have to do the same for their employees. Now, all contributions with a SEP are made entirely by the business. The employees do not contribute anything on their end. So it's simply the business making a percentage of a salary contribution on behalf of the employees. The contributions that the business makes are considered business expenses. So those are deductible. They lower your bottom line and lower your profit. The contribution amount that can be made in a SEP IRA is up to 25% of your salary or your employer's salary if you are an S Corp owner. If you are a sole proprietor or single member LLC, that amount that you can contribute to a SEP IRA is 20% of the business income. The maximum amount that's allowed for 2019 is $56,000. And now one big benefit of the SEP IRA is that it can be opened and funded after year end, up until the date that your tax return is filed, including extensions. And we did an episode on SEP IRAs earlier in tax season. And so that's where they really come with a good benefit, is that you can open it after the year ended and make contributions after the year ended for the prior year. So if you get into tax season, you see a big tax bill and you're looking to minimize that tax liability, this is a great vehicle where you can still get that expense after year end. Now, I want to switch gears here and talk a little bit about the Solo 401k. Now, the Solo 401k is a plan that's available only to business owners, spouses involved in the business, and partners. Other employees are not allowed to participate. And the difference from the SEP is that the employee salary deferrals are allowed along with employer contributions. So with the SEP, it was just the employer making the contributions. With the Solo 401k, it does allow contributions on the employee side. Now, employee deferrals cannot exceed $19,000 annually, and with an additional $6,000 for those of you that are over 50. The maximum combined employee contribution plus employer contribution cannot exceed $56,000 in 2019. And again, there's an extra $6,000 for those, up to $62,000 for those that are over 50. Unlike the SEP, the account must be opened before year end to take advantage of the deduction. So this is something that if you want to take advantage of in 2019, you must have the Solo open before year end. However, the actual contribution, similar to the SEP, can be made up until the date the return is filed, including extensions. But the account still must be open before year end. With the Solo 401k, there are minimal government filing requirements as compared to a regular 401k. That's one big disadvantage of a regular 401k, is that the filing requirements can be extensive. With the Solo 401k, they are much more minimal. Now, you might be wondering, that's great. Thanks for giving me information on the SEP and the Solo, but which one is better for me? Now, the SEP IRA will be the easiest one to open, And it is also a great option if you're sitting in tax season looking to make contributions to lower your tax liability, but do not have any account opened up. And while the solo 401k might have a little bit more paperwork when opening compared to the SEP, the difference is very minimal. The big difference between the two is that the SEP is tied to a percentage of income. So if you have a low income year or you have a low S corp salary, the amount that you can put away into the SEP may be limited because again, it's based on a percentage of your salary or your income. So that would be limited. Even if you have the funds to actually fund it, you would still be limited by it. However, with the solo 401k, as long as you have income up to the $19,000 limit, you can contribute that full amount. So let's say you're running an S corp and your reasonable salary is $19,000. Your salary, that full $19,000, could be put into a solo 401k account. There is no really one size fits all when it comes to retirement planning and what option is best for you. But generally, for those business owners that are looking to put a lot away into retirement and plan to have the account opened before year end, the solo 401k is often the better option. Now, regardless of which option you choose, the big thing is to not forget about retirement planning as a small business owner. Too often we see small business owners that just keep pushing back retirement planning. And the big thing is make it a priority to pick a plan, whether it's big or small, that you can afford and makes sense for you. And so reach out to your financial advisor to discuss these options that are available to you as a business owner and which one they think might make the most sense for your specific scenario. If you need a referral to a financial advisor that focuses specifically on small business owners throughout the country, contact me and I can make that introduction for you. And I just want to go through again a quick summary of each. The SEP IRA is contributions are only made by the employer, and the contribution amount is up to 25% of your salary if you're an S corp owner, or 20% of your income if you're a sole proprietor or single member LLC. The contribution that you make to yourself as an owner, if you have employees, that same percentage must be used for them. The maximum amount that you can contribute for 2019 is $56,000, and the one big benefit of the SEP is that it can be open and funded after year end. So if you're in tax season, you can still open that account up and fund it and get the tax advantage. Now with the solo 401k, it's different from the SEP, where employees can defer salary into a 401k, and it also has employer contributions that can be put into the solo 401k. The max on the employee deferral side is $19,000 annually. If you're over 50, there's an additional amount. And the max combined employee contribution plus employer contributions cannot exceed $56,000. Again, additional $6,000 if you're over 50. But unlike the SEP IRA, the solo 401k must be open before year end. And another advantage of the solo, one other advantage of the solo 401k is that you can, it's not based on a percentage of your income or a percentage of your salary. It's just capped at certain amounts. So if you want to put all of your salary into it, you can do it as long as you have enough salary amount to make up for that. Now, as a small business owner, if you have employees, you might want to consider another plan, such as a regular 401k or simple IRA. Those might be better choices for you based on some of the limitations with these accounts. The SEP and Solo generally are best for those small business owners that do not have additional employees. So we're going to go through the regular 401k and the SEP IRA in next week's episode to dig a little bit deeper in there so you can get a good idea of those options that are available to you if you have business owners. So that's all we have today, again, on the Solo and the SEP IRA. If you have any questions or you need an introduction to a financial advisor that can really look at your specific scenario and find a plan that makes most sense for you, let me know and we can do that. I want to thank everyone for joining today. Be sure to check out our website. It's www.taxsavingspodcast.com. And this is just a great resource for you to go and look at our most recent episode, as well as find some extra items if you want to take what we discuss here on the podcast and dive a little bit deeper. Also, please join our Facebook group where we share tons of value and have the opportunity to bring up situations that you are faced with that we might not talk about on the podcast. You can join our Facebook group simply by searching in Facebook for Small Business tax secrets, and there should be a group that pops up that you can join. Again, guys, I just ask that if you enjoy our weekly episodes, please leave a review on whatever platform you may listen to us on and share with other business owners. If there's a specific topic you want us to touch on, shoot me an email and we can include it and put that on our schedule. Thanks again for tuning in to another episode. I will see you next week.